And why don't you walk us through this? Because it's a great piece, Bridge.
Yeah, so I think it's easy, like, to get, we see all this data, like the raw data, and we're like, well, number one, what does this even mean? And number two, like, there are so many different ways to measure employment and kind of unemployment related stuff.
Absolutely.
Stuff is the best, only word I can think of right now. And so I kind of wanted to put together some information about three main types of employment-related data, how they're related to each other, what they mean, and they're all have come out this week or are coming out this week, so it's pretty relevant. And then, of course, how they affect the Forex market. So I know I went really into detail on non-farm payrolls here. I'll go a little into that, but mainly it'll just be about how they're connected. So yesterday we had JOLTS. The 8th, Friday, right? Friday, we have non-farm payrolls and unemployment. So again, what are they, how they're connected, and how do they affect the Forex market?
Great.
So getting into the JOLTS report, and that's job openings and labor turnover survey, hence why there's...
So it actually means something.
Yes, it does mean something. It wasn't just a fun word. But what it measures is it just pretty much shows the number of job openings and separations, so quits, layoffs, and discharges within the U.S. economy. And its focus is, again, the number of job vacancies and kind of how easy it is to find jobs in different... And it's also field specific, so how easy it is to find jobs in certain specializations. So as of November, the last set of data we got yesterday, job openings increased by 259,000 to a little over 8 million. And this was actually far above market expectations. And then to your right, you'll see a chart of kind of what 2024 looked like. And so you'll see it kind of decreased a little bit going into September. I believe that was around the month of the Boeing strikes, correct? So we have a bit of an outlier there. But just for context, there's that chart kind of explaining what we've been seeing. And Pete, what do you make of all of this? Do you think we're kind of moving on a typical trajectory here? Do you think, other than the Boeing thing, there were any other outlying factors? Or
no, I think the strike makes September kind of an anomaly here. I think what economists will look at is the rate of change starting to increase. In other words, are there more openings? Is the job market less hot? Is it right now? You would argue it's a little bit of a seller's market. The unemployment rate is low. The JOLTS report has been showing that there's not a lot of openings, so there's not a lot of there's not a lot of available jobs, so the market is relatively tight. So I think this is, again, something you look at that the market will digest and parse. It depends on how far you want to go down the rabbit hole. Understanding what it is in context, I think this is, again, very specific as to job function and category, as you mentioned. So it gives you a little bit of an idea of, you've got everybody. We'll talk about non-farms and what that says. This is the other side of the equation. What is the available pool of jobs? Are there a lot of available jobs out there, or are there fewer jobs? And that gives you one set of, again, the job market is supply and demand. There's a supply of jobs and then demand from employers for them. As that ebbs and flows, it is one way to speak to the health of the economy. So again, when you think about it that way, how important is this one number? For me, the importance is the market does look at it, move off of it. That's what I want to be. Don't get too caught up in the reports itself. But again, the overlying trend is what people are going to look at. So your highlight of the anomaly and the fact that we're seeing a little bit more job openings means that the market is maybe a little less tight than it had been previously.
So I, won't waste my breath too much on this, since I know I did a ton of slides about it the other week. It was
great.
However, I'll just go over it a little since it's coming up on Friday. So Nonfarm Payrolls provides data on jobs added or lost. And the main point about it here, the title's pretty literal, that it excludes farm workers, but also government employees, as well as a few other categories. And it kind of generally highlights employment trends and is known to be pretty directly correlated to the unemployment rate. So it's considered a very critical indicator. As of November, 227,000 jobs were added, and this was seen as a pretty strong recovery from October's numbers. And as for December,
is that same strike anomaly piece in October, right?
Yeah, and December is forecasted at 154,000. That numbers to come out this Friday. We'll see again with also revisions and stuff. We don't really know exactly where it'll land, and of course that's people,
All right, why non-farm?
Not farmers.
Right.
Yeah.
But why don't they include those workers?
Seasonal work.
That's absolutely right.
Bingo.
Great.
There we go.
So the other side of the crate, how many people were added or taken away. Non-farm payrolls tells you how many people added or taken away from the workforce. Unemployment is the rate of how many people are currently unemployed. Now you would think, well, in a perfect world, nobody's unemployed. There always is what they call frictional unemployment. There is always a rate that is positive of unemployment that it is just people in transition. So when they talk about, well, how can we say we're at full employment and the unemployment rate's at 4.2%? That says 4.2% of the workforce is unemployed. That's where it gets around this frictional measure of people who are transitioning from one job to another. So again, another indicator of what percentage of the workforce is working, what percentage of it is not.
Right. And I think it's important to remember, like, the definition of unemployed in a technical way for the U.S. economy is people who are actively seeking employment. So that number does make sense. And but yeah, going into good segue is the unemployment rate reflects who is unemployed and looking for a job, and it's calculated using household surveys. So again, the focus is how easy is it to find a job for people who are looking for one. This rate increased by 0.1% this November to 4.2%, so a slight upward value. But yeah, we saw it slowly go up this year. Again, all these charts reflect 2024, and go down a little bit September, October, and then go back up again. But again, what do you think of all this with relative to kind of past years and circumstance?
I think the full employment number is always a debate. One that the Fed has, economists have. What is it? It used to be 5%. They feeling it's more like 4.5%, 4.25%. What that means is if we have a rate below 4%, like we did back here, there's probably some wage pressures in the market. In other words, there's not enough people looking for work, and we're going to have to pay more to get bodies. So this, if you look at it from an economist's point of view, means there may be some wage pressures. As this number gets to this kind of frictionless area, this is kind of the sweet spot of where they want it to. They want enough people looking for work that doesn't stimulate wage pressures, but provides a pool of workers. So this area is ideally, if reading the Fed stuff, is kind of where they want. So how are these all connected?
Yeah. So I think I kind of thought of it as like a Venn diagram, and that almost like moves in a circle. So when we start with JOLTS here, we'll see high job openings. They tend to lead to increased hiring, which influences non-farm payrolls because that's jobs added. Then we look at non-farm payrolls and unemployment, and those are considered pretty directly correlated, like I said. And although it's not perfect, obviously, there's not really such a thing. But changes in non-farm payrolls, they tend to show generally, are we gaining jobs or losing jobs overall? Then kind of we look at unemployment, and that is influenced by kind of the hiring trends from non-farm payrolls, so the job, and then also the number of jobs reported. So it's kind of a working combination of the two.
And this is great because they do all push and pull against each other. And you highlighted, again, the unemployment rate is determined by a survey of households. How accurate is that? Who knows? Depends who answers the survey.
Right.
I think for the trader out there who really wants to, well, what does this mean? This is fantastic context without driving down through too much of the rabbit hole, because we're not macroeconomists, we're traders. We want to be able to have context and then be able to take action. So most importantly, Forex implications.
Yes, so why we're here. So I kind of broke it down into obviously each set of data. So positive JOLTS data, and it can lead to increased interest in the currency because traders will see a potential for more economic growth and also more tight monetary policy from central banks. If we look at non-farm payrolls, if it's a higher than expected increase, this also can tend to strengthen the currency, the US dollar, I guess, in this case, as it can prompt tighter monetary policy as well.
Precisely.
And on the flip side, if we see weaker payroll numbers, we might see a slight weakening of currency. Then we look at unemployment. A lower rate generally considered bullish because even just the general public, you want to think, oh, you want unemployment as low as possible. So it's kind of like even just an emotional thing, as it tends to be a signal of economic health and prompt higher interest rates. On the other side, obviously a higher unemployment rate tends to weaken the currency if it suggests a slowdown economically or interest rate cuts. But again, this is all in combination with other factors and kind of what people think at the time. An increase doesn't always necessarily mean that, just like a decrease doesn't always mean, you know.
And that's the great takeaway. And this is a wonderful walkthrough. We'll get at 7:30 when this number comes out, non-farm payrolls are on point, we'll get a reaction in the FX markets. It will run one way or another if that number is materially different from 175. Putting context around what that means, if the number is better than expected, we'll see the dollar traditionally strengthen. Now, the dollar's had a lot of strength this past week, so we're just going to jump back to the platform. How much more does it get? That'll be interesting to see, and whether or not it sticks. So I love these binary events, not because I'm trying to guess what it is. Oh, 175 is too low, 200 is too high. Don't go through that. Set your levels. Think about what you want to accomplish here, where the market's leaning. If you get a bullish number, which means a higher print and dollar Canada trades up closer to 145, if you're a contrarian, that may be a level that's interesting for you to short. Think about your levels, get your setups, and wait for the number. It'll either give you something or not. If it doesn't, you move on to the next thing. But this is great context around a binary event, how it's broken down. You have, between this and what Glenn put together in terms of movement, you now have the tools to put together, okay, now I can deal with a binary event, and I know how to find a trading opportunity.
Yeah.
Wonderful walkthrough by you.
Thank you. Thank you. Yeah, this was fun.
All right, guys, coming up next is Tom Sazoff, Tony Batista, Vanetta Logan. Stay tuned, and we'll be back with you on Friday for that unemployment number at 6:30 in the morning. Have a great day. Thanks, Bridget.